Let me say something nobody wants to admit. America doesn't break in silence. It breaks in patterns. And right now, the patterns are loud. Foreclosures are up 20%. Household debt, highs in history. Unemployment rising, while companies are cutting tens of thousands of jobs and blame it on AI. And USB Bank just put a 93% chance of a recession on the table. But here's what people forget. The moment things look like they're at their worst is when the biggest wealth transfer happens. And so tonight, I'm gonna show you what's happening. And I'm gonna show you why it's happening. And then we're gonna position ourselves for the next wave. We're gonna get on the charts on the S&P to see what we should be looking for. Not to mention, we got NVIDIA earnings coming up Wednesday. So this is a powerful week for us in the market. So before we get into this video, man, y'all know the routine, man. I need you to like, I need you to subscribe, and I need you to share this out. Help us get to 2,000 likes, man, because that really helped the channel go. And make sure you comment and tell me which part of this that you like the best. Now, I will say last Sunday's video, y'all really showed me that y'all like when I do these Sunday recaps. So I'm not going to waste your time. I'm going to really lock in and give you a bunch of information that you can really use as we move forward, because my goal is to help you turn your last name to an asset. Let's get to it, y'all. Let's go. So let's start with reality and not headlines. Foreclosures jumped 20% in 1 month. That's right. October gave us 37,000 homes sliding into default. And if you zoom out over the last 8 months, that trend is undeniable. Homeowners are really having a hard time right now. And it's not because people just suddenly became irresponsible. It's not because systems just are unaffordable. Like, let's think about it. Here's the data. Household debt is at 18.6 trillion. Mortgages, 13.1 trillion. Auto loans, 1.7 trillion. Student loans, 1.7 trillion. And credit card debt, 1.2 trillion. Americans aren't just overspending. America is overpriced. I'm gonna say that again so you all can really hear what I'm saying. Americans aren't just overspending. America is overpriced, just like a lot of stocks in the market right now. And so we gotta do something about it. When buying a house requires 2 incomes and keeping the house requires 3, something is fundamentally wrong. Now, when people get squeezed financially, or when they feel like that, man, they stop dreaming. And when you stop dreaming, you stop planning. And that's how opportunity slips through your fingers. It's been called the American dream, y'all. Why? Because people dreamed the way they wanted their life to be. And then America actually provided a way for you to go get it. But the pressure isn't only on the household, y'all. Corporate America is signaling something bigger. Something really bigger. And for me, I'll be honest, we keep hearing people talk about, yeah, well, the jobs are going to be in plumbing. And we hear them saying, yeah, well, the jobs are going to be in this and the jobs are going to be in that. And that's true until the time comes when they feel like, well, we can get robots to do that too. Because the one thing we know about America is they're going to keep progressing. They're going to keep moving forward. They are at odds with China. And we see China just releasing robots by the thousands. And so what is America going to do? They want to keep up with this race. Something hit us really hard this week when we heard CEO Jensen Huang of the company NVIDIA, who reports Tuesday, say America will lose the race to AI to China. And that shook the market. We've seen the headlines, y'all. We've even seen Walmart, the biggest employer in America, announce that they will be going on a 3-year hiring freeze. Tech companies are cutting tens of thousands of jobs. Retailers are quietly removing positions. And logistic companies, man, they shrinking staff. The excuse, the words you keep hearing in all the earnings, efficiency, restructuring, AI integration. But here's the truth, man. It costs to survive. And so the one thing I know as long as I've been in the market is we are going to keep seeing companies do their best to keep profits up. And one of the ways that they keep profits up, matter of fact, let me bring that back. 3 ways that they keep profit up is 1, you cut people. 2, you increase prices. 3, you shrink stores. And this is how you do it. You cut people, you raise prices, and you shrink the stores that you have so you can build that bottom line up. And the fourth way is they make investments outside of their company. Now, the easiest thing for them to do is blame it on being bloated. Now, AI didn't start the layoffs. It accelerated decisions that companies were already scared to make. Walmart even said it. Every job we have is going to change. Now, I want you to understand something. Walmart is the biggest employer in America. So when they come out and say something like that, it's not a threat, y'all. That's a roadmap. Automation isn't coming. It's already here. Like they triggering the button to just let people go by their head count. So before the recessions hit, not after it hit, y'all. Now, when a system removes its workers, it creates winners and losers. And winners are always the ones who understand the shift early. And that's what I want to do, y'all. Like when I start doing these recap videos for y'all on Sunday, like I want to take in all the news that we heard last week. I want to take in all of that news and position it for us so we can be like, all right, bro, like here's what happened. And then when we get on the chart, you can be like, okay, I can understand it a little better. I can read it a little more so we can position ourselves, right? The biggest signal, y'all, doesn't come from the companies. Like, let's put that in our head. It comes from the people who bet billions on the market. That's right, y'all. It don't just come from the company itself. It comes when we listen to the earnings, and we can look at the market, and the market can tell us something. UBS, that's a bank. They big. They just sounded the alarm, y'all. Not TikTok, not Twitter, a global investment bank, UBS. They just put the probability of a U.S. recession at 93%. This is not me trying to get a headline. This is me trying to get you ahead of the line. Because unemployment, it's creeped up from 3.4% to 4.3%. It's not random, y'all. That's momentum. And recessions, they usually start when unemployment crosses 4.2 and keep rising. Now, I won't say something. When we think about recessions, nobody can really say like when it's going to hit exactly. But here's what we do know. They always catch us off guard. And the people on Wall Street already know what's happening. They see the numbers, so we can see it. So we got to start seeing patterns when we start, like, if you look at recession indicators, like one of the things you start seeing is a lot of stores start to close down. Well, we seeing that. We seeing stores like Wendy's. We seeing so many different stores close down, thousands of stores. Then we see jobs start going away. Then we start seeing what? Things start going on sale. We see companies start laying off a lot of people. Why? Because they're trying to keep profit, because they got to keep up with the spend that they're trying to do. And one thing that companies do, and I'm going to tell y'all something that I really know is the truth, yo. Anytime you listen to companies that's on the stock market, notice what you always hear them say: shareholders. We got to do whatever to keep our shareholders happy. In the stock market world, this is how it goes: CEOs, shareholders, then customers, then workers. And I'm going to be real with you. These cuts and what we see right now, I just want us to be prepared. Like, I'm not the person to ring the alarm because I don't know what's going to happen. It can happen a year from now. It can happen 2 years from now. It can happen 3 years from now. But here's what we got to understand, y'all. Recessions are part of the economic cycle. It got to happen, y'all. It has to happen. And there's no better time right now when we're seeing debt at $38 trillion. I'm just saying, $38 trillion in debt. The dollar is consistently losing value, right? We see a president that's saying like, yo, we might have to do a 50-year mortgage. I'm going to be honest with you. At first, I was like, man, you out your mind. But I'll be honest with you, yo. Like, and I want y'all not to crucify me for this when I say this, right? It looks really bad on a country when people can't afford to live. Now, has Donald Trump added to the goddamn on debt? 100%. Has every president before him consistently added to the debt? 100%. I don't know how we get $38 trillion down. Nah, they are saying like this, we got to go to court for these tariffs. If they're saying they're going to use some of the tariff money to pay down debt, but if the tariffs are not legal, that's going to bring a whole nother situation to the markets, because we don't got no $90 billion or whatever that was to pay all that back. We already $38 trillion in the hole. We can't win. So I'm not saying that the 50-year mortgage isn't insane, but one of the things you gotta tell people is that they can live, right? And so when the price of renting is cheaper than home is better than home ownership, then you have a serious problem, right? And it's kind of like two evils, right? Like it serves a purpose, but it hurts the person anyway, right? And so it's just a hell of a situation for us to be in, right? But here's what I will say. Adding thousands of AI job losses, slower consumer spending, the housing stress, the pieces to the puzzle, like we don't gotta guess. We see them right before our eyes. So here's what a story turns. Because policy determines pain. And I always just want to tell a story so you can see what's going on. The government shutdown, well, that got ended. And Congress went to the edge, right? Government workers were days from missing out on another set of paychecks. Air travel was already collapsing, thousands of flights canceled going into this part of the year. We talked about that last Sunday. Food insecurity is rising. Small businesses are really choking. Republicans had 53 seats, Democrats had 45. 8 Democrats crossed the aisle and said, yo, we got to put this through. Now, I'm not here to say it's right or wrong, but I'm not for people like not eating. You know what I'm saying? Why? You know, these healthcare premiums that was tied to the Affordable Care Act, well, they about to jump 30%. And we talked about that. The compromise, well, the Senate promised to do what? Vote on Obamacare next year. No pass, just vote. Just vote on it. And if that vote fails, then we face another shutdown early 2025. And then we got a Fed that's cornered. The Federal Reserve is really in a vice grip right now, right? They wanted to cut rates in December. They hinted they were ready to, but now that probability has flipped. Right now, the markets show a 55% chance that the Fed pauses instead of cutting. Now, what does that mean? I'll be honest with you. That rate pause will make the market bleed. Not collapse, but it's going to bleed. Because a pause, well, that tells investors, we don't think the economy is stable enough or weak enough to act. Now, that's crazy. That creates uncertainty in the market. And markets hate uncertainty, especially a market that's looking for a catalyst to go higher. And we don't have that catalyst. We don't get that Santa Claus rally. We don't get that Santa Claus rally. We don't close the year strong. And history shows something wild happens after a government shutdown. You want to know what that is? Well, to all my Bitcoin people that really love Bitcoin and that really enjoy Bitcoin and who are Bitcoin advocates, well, here's the pattern. The pattern is the last time the government reopened after a pause, January 2019, Bitcoin exploded more than 300% in 5 months. Will that repeat? Nothing is guaranteed. History doesn't repeat itself, but it often rhymes. And so, shutdown ends, confidence returns, liquidity loosens, rising assets bounce. But the real message, well, I don't really think it's about Bitcoin. I think it's actually bigger than that. I think there's more to that. And the reason why I say there's more to that is because this. Most people don't hear until it's too late. Recessions don't destroy wealth. Recessions transfer wealth. Transfers from the emotional to the informed, from the reactive to the prepared, from the panicked to the patience. If you can lower your expenses, y'all, increase your cash flow, build discipline, and invest through the fear, you will come out on the other side of this ahead of everybody who was frozen. So I'm not saying recession because I want you to be scared. I'm saying recession because I want you to be prepared. This moment isn't comfortable, but comfort never built wealth. Now's the time to get serious. Now's the time to plan. Now is the time to study. Now is the time to invest with intention, because the people who move during this uncertainty, man, they will own tomorrow and you will own. You will buy back your freedom. So I'm going to say something to you. This season, You only buy assets, you only buy access, and you only buy information. Because if you stick to those things right there during this season, it'll put you in a position where you can truly look back and say, okay. I want you to give you an idea before we get into the charts, before I get into the S&P 500, before I get to this chart and do this breakdown, I want you to ask yourself this question. Who felt the pain in every recession and who came out on top? And if you look around you, if you go do the research, if you go do the data, you'll see it was people like us that felt the pain. It was people that come from where we come from that felt the pain. It was the people who was already billionaires and millionaires who increased their wealth. So I don't want you to be scared. I want you to be prepared. I don't want you to run out of chip when we get a massive dip. All right, man, let's get into the chart, man. Let's get into the S&P 500. Let's get into this chart. I won't prepare y'all for this week. I appreciate y'all for staying with me this long, man. Make sure you like, make sure you subscribe, make sure you share this with somebody. Make sure you tell me in the chat how you feel about this. Let's get into the chart. So the first thing I'm gonna do is, man, I want to start off on our weekly chart. And as I start off on our weekly chart, I want us to really look at this as a squad. I want us to look at this as a team because I often feel like people, they don't get an opportunity to get into the charts the way that we do. And if I can do that, then let's get it. All right, so first and foremost, man, we're gonna look on this weekly chart. Let me do this down. We're looking at this weekly chart. And what I want you to see is that we are currently in a macro uptrend. So, like, the structure is clearly bullish, but we are dealing with a pullback, like some digestion from an all-time high, right? Not a full-out bear structure, but we got to map some things out. So the first thing I want us to see is, let's just mark out our all-time high right quick. Boom, we'll mark that out, all-time high. Then we'll type that in. Right, we'll pop on, boom, boom. We'll type that in. And the next thing I want us to do is look at our previous week high. So we'll mark that in right here. Boom, previous week high, because we're going into a new week, right? And then we'll mark this out. We'll mark our previous week low here, again, because we're going into the new week, previous week low. Now, that's going to be important for us to see right there, right? So we got a previous week high, we got previous week low, we got all-time high. So here's what we know right now, just looking at this, we know for a fact that we have some trap bias. So any bias, so you see that doji where we hit all-time high and then you seen it got pushed down. Well, what we see right there is anybody that we call those breakout trap bias, right? A trap breakout bias. Let me rephrase that. So we have some trapped breakout bias. That means once you saw this, so they had some buyers that actually saw this gap right here take place. So once they saw that little gap up and once they saw we was going on all-time high into that week, they tried to get into that because they thought we was going to keep pushing. Well, we hit that 689.95. They was late buys, they got trapped. So they've been trapped for the last 2 weeks, right? So they really stuck up in there for a second. Now, I want to also talk about a little bit about this range. So you see the previous day high, and you see your previous day low. Let's open this up a little bit more so you can see what I'm about to talk about. This is going to be interesting. So while you're looking at this, you may say, well, Trap, this is another bad week. But I beg to differ. This is an indecision week because we do have that indecision candle right there, even though it's red. I would even go as far as to say this was actually a win for the Bulls. And I'll tell you why. Just hear me out. So you have what's called the inside bar, which means this candle here, where the previous day high, previous week low, is inside of this previous bar right here, the bar before it. And what do I mean? Well, it didn't break the low of last week and it didn't break the high of last week. And it actually closed right on a little bit. So it closed a little bit. So last week closed at like 670, and this week closed at about 671. So actually closed like $1 and something less. Now, I don't want to be in semantics like that, but we'll just say it closed a little bit higher than it did last week, but it didn't hit last week's lows, which is good for us buyers because that tells us that the sellers did apply some pressure, but the buyers didn't let them break previous week's lows. Now, that's a good, like, even that's like a you beat me up, but like you ain't really beat me up. You feel me? But let's go a little deeper right here into this chart because we need to look at something. Here's why we can say we still in the uptrend, because we still have all of this. Right, so we still in that uptrend right there, and I'm with that. So we haven't switched to a full on bear market. The next thing I want to do is I want to come right here and I want to use my trend line, because I know I got my trenders out there. I got my trend line people out here, right? So what I want to do is I want to draw this trend line from this low, right? I'm going to draw this trend line from this low. And we'll make sure we do this the right way because we want to make sure we can get y'all what y'all need. All right, so that's perfect right there. Right, notice how that trend line, show y'all right here as well. There you go. All right, so notice how that trend line on the downside, notice how that trend did not break. Notice how the sellers did not push through that trend line. Now that's essential. And the reason why that's essential is because it tells us that on this side of this trend, there's also stop losses right here. Right, there's stop losses right there, right? And those stop losses can be used as liquidity on the downside, sell side liquidity, meaning the market knows that there's people right there that could be using those. That's because you got, so for me, I'm not so much as a trend line person like most people are. I use them from time to time, but I don't really be like all in on them like that. I like to go the horizontal way. Uh, so one of the things we see here is two right below our trend line is our what, SMA 20. So you notice how sellers didn't get, you still have some room on that. So that'll be interesting to see if buyers can keep defending that on the weekly structure. So I want you to just look at that and say, there are going to be some stops under that previous week low, right? There's going to be some stops under there because there's some people that's saying, there's some buyers that want to hold that, like, I don't want to go that low. And so if the sellers can take that out, they can use that to push down a little bit further. So that's um, something I want y'all to look at right there. But let's go a little deeper though. Let's get a little more information. Let's go on our daily. And so this is where we'll find a lot of information at. This is where we'll get a lot of information at. This daily chart gonna help us a lot going into the week. So we're still doing that. Now, let's mark a couple more things out right here. Right. So as we get on a daily, what I want us to do is I want us to mark out, before we do anything, we'll mark out our previous day. Let's change that. Let's go red on them. Let's mark it. Previous day high. We'll mark it off. And then we'll mark this again because this is also our previous day low. Right. Now, I also want to add one more thing on here that's going to be really good that I think is interesting for us to see. And I'm going to title this right here. Title this Trump Sell Off. Right, because that's where the sell-off started. I'm going to give this a different color so we can identify. Well, no, we'll give it another color. We'll go with yellow. Yep, so that's the Trump sell-off. And then we'll do this again. Trump sell-off. That's going to be an interesting line for us. All right. So now that we got that marked out, let's mark out a couple of things. So here's what we see. We see the sellers did push us past our 20-day, which is at 677.51, right? So we saw that our sellers pushed us through the 50-day and they pushed us through our 20-day. So, I mean, we 20-day, which is 677.51, and our 50-day, which is 668.48. Now, the reason why that is important because that tells us that the sellers have taken over the short-term trend, right? So I still see um that bullish uptrend happening, but I gotta acknowledge that we see this. I gotta type this right here. So right here, we have a lower high at all-time high, and then we have another lower high right on top of previous week low. So we do have two sets of lower highs, and what comes after lower highs? That means we got lower lows. So we do have two sets of that going on. Now, the next thing that we see that is important is, and I like to look at the whole screen, is we want to make sure that we acknowledge the TSO, which is the Trump sell-off. Now, notice at the bottom of the Trump sell-off, you have what's called an equal low down there, right? That's going to be pivotal, but also at previous week low and at previous day low, PWL and PDL, that's really close to a equal low. Now, what you need to see in that moment is Friday. Let's open this up some more so you all can see this. All right. So Friday, what we looking at is on this candle, this green candle, we saw that buyers stepped up, right? They stepped up. They got close to that equal low again. Now watch this though. I'm about to show you something that's gonna be interesting. Look at that. So things don't just happen on a chart for no reason. You feel what I'm saying? Things don't happen on a chart for no reason, right? So buyers got to that point and was like, nope, they absorbed all that selling pressure, right? And so what happened was real interesting is once buyers took that, they pushed us back on top of this Trump low. Now, the interesting part about this Trump low is I want to show you something interesting about this. And I hope y'all with me on this, man. I hope I'm not speaking over nobody's head or nothing. You have all of this, choppy water right there. Right? That's choppiness. That's a lot of choppiness going on right there. That's just messy right there. And so when you go back inside of that type of mess, you kind of don't want to trade on that because that's a lot of stuff going on. And it's a lot of supply over there because of that Trump sell-off. So there's a lot of supply sitting over there, which is like a messy place to be at. So you either want one or two things to happen, right? You either want the buyers to, go back up or you want the sellers to push back down if you're a seller. So I want you to notice something interesting that happened over there that was real cool. So we got back inside. Let me use my box on you right quick. We got back inside of this area right here. This is a sloppy area right here. We don't want to be inside of that area right there because that's the Trump sell-off area, right? But we got back inside of that. But notice what happened. We hit that previous day low. We hit that previous week low. And look what happened. We tried to come up out of that. We tried to rise above the Trump sell-off. We try to rise above that Trump sell-off. We try to reclaim our previous days. We try to reclaim our SMA 20, which is this line right here. But sellers rejected that. So we got above it. Now, it would have been really good if we could have closed on top of that Trump sell-off. If we could have got on top of that and we could have closed right at that previous day high, we could have closed above that Trump sell-off or took out that SMA 20, that would have been really good. But the buyers, two things fought us right there. The SMA 20 acted as a form of resistance, and then the top of that Trump sell-off acted as a form of resistance. And so the sellers used that as a point to say, I'm not letting y'all get above that. Right? I'm not letting y'all get above that. And that was real interesting because as I watched that take place, I was like, dang, like we really need to get on top of that, right? But here's what I want to say to you. So the primary structure support here is 663, which is the previous week's low. So we need to see something happen. Now, this is why we talked about NVIDIA earnings. NVIDIA earnings is going to be pivotal because the weight of the world is sitting on NVIDIA. Now, I will say the last 3 times NVIDIA had earnings, they actually beat expectations, beat earnings, and gave forward guidance, but the stock fell about 2%. We don't need that this week. I'm going to just be honest with you, right? So 663 is going to be a pivotal structure break. So what you want to see early in the week, Monday and Tuesday, you want to see the market get on top of that. We closed at 671. We have our SMA 20 at 677.51. We at least want to get on top of previous day's high. And if we can get on top of that SMA 20, that would be the buyers taking control. That would be the buyers taking back control. You need to see that. If you're a bear, you want to push them back down to previous day lows. You want to push them back under that SMA 20. Now, I want to say something right quick. Buyers also stepped up. You have a rising SMA 50 and you have a rising SMA 20. They have not crossed one another, which is good. So buyers did do something that you got to get them credit for. They jumped on top of that 50. Jumping on top of that 50 and then closing on top of that 50 actually said that, hey, we're not going to let y'all punch us down like that. Like, we really won't fight for ourselves right there. And so that was great to see them do that. And so what you want to see is that. Now, on the other side and on the flip side, here's what you also going to see. If at some point the bears break past previous week lows, break past previous day's lows, there are stop losses under there. You break that, you take those stop losses, that becomes sell side liquidity. They take those orders and then they do what? Push down. Then they're going to threaten those equal lows at Trump's sell-off, which is yellow at 652. Now, if the bears push to 652, that has to be the line in the sand for the bulls. That has to be the line in the sand for the buyers. Because if the buyers let the bears break past 652, then the next place they can go is, let's see where we at, probably here at 647. Or you might go to this double low right, or this equal low right here. You might go there. Yep. That's it. That equal low right there, 643. So if you fall from 652, if they fall through the Trump sell-off at 652, they break previous week low, I'll probably short the market going into that Trump sell-off. If they break the Trump sell-off, I'll probably keep it short all the way down to 643.14. So that's what you're looking for to hold right there. If you a bear, that's what you going. You trying to take them all the way down. You telling them you want to take them all the way out right there. So that's kind of what you're looking for. If you a bull, your goals are simple. If you bullish on the market, the goal is simple. You want to see bulls or buyers get on top of previous day's high, which was you want to see them get on top of it, get back on top of the Trump sell-off, and you want to see them get on top of 675. And then you want to see them reclaim the SMA 20, which is 677. You want to see them claim that. You want to see them get on that and hold that down. Now, what I will say is if they get on that, I'm still not interested in selling that or buying that or taking part of that, because you still have this you got to get over. You still got that supply you got to get over. So what I would say is you get on top of that and then you break previous week high 685, then you might got some action. But you got to claim, you got to reclaim as a buyer. This is such a pivotal week for the buyers. Like, this is round 9 and you need to go, you got 3 more rounds, right? You need to close on top of 677, which is that 20-day SMA. You need to get that momentum back. You need to fight to get that momentum back. But then you need to get back on top of 685 because that was previous week high Wednesday before you got sold off on Thursday. So you got to reclaim that, right? But if you're a bear, you saying to yourself, I can't let them do that. If you're a bear, you saying, I need to take that 50-day SMA out, which is 668.48, and then I need to push down past that previous week low, which is 663.30, And then you saying if I break them from there, I can push them down to 662.84. And from there, you saying I can push them all the way down to 643.14. And so if I'm you, that's what we looking at this week. It's not my goal to be bearish. It's not my goal to be bullish. It's my goal to give y'all the game on what we seeing in the market this week, man. So I hope you all got something from me this week. I hope I was able to lay some things out for you. And if you want to look at the QQQ, it almost looked just identical as the SPY. So that's the only reason I ain't do it. So I hope I give y'all some game. I hope I give y'all some firepower. Let me know in the chat if you like what's going on. Listen, man, when I say Wall Street looks like us now, I mean Wall Street looks like us now. When I say I'm in it for us to win, I'm in it for us to win, man. It's your boy, the Wall Street Trapper. I love y'all. I appreciate y'all. I'm out. Salute.